Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside were created. Every time the market tested its zone, it rejected it to the upside quite aggressively. And at the moment, the market is testing the exact same zone and is already in the process of rejecting this level to the upside. So the monthly time frame at the moment does seem quite bullish, and more bullish price action could be created away from this area, as already happened in the past when the market was testing this exact same zone. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is a textbook shift from a weekly bearish market to now a weekly bullish market. In fact, we can notice how the market here was creating weekly lower lows and lower highs. Then we had the shift to the creation of higher highs and higher lows. So essentially, we had a perfect shift from a weekly bearish market back to a weekly bullish market, because what we know is that the definition of a downtrend is the creation of lower lows and lower highs, and the definition of an uptrend is the creation of higher highs and higher lows. And in this case, what we had is the shift from a downtrend to an uptrend, with the inversion pattern of the trend being this double bottom formation. So we essentially had a perfect double bottom exactly here, which started the inversion of trend here from a weekly standpoint. So also here in the weekly, what we could expect, a bit more bearish continuation, and then potentially the creation of a new weekly higher high. So essentially the next weekly higher low, and then the next weekly higher high. Dropping down on the daily time frame, what we can see is that at the moment the market is starting to create an M pattern. Now, if the market will actually create this M pattern, at that point there will be a good probability of seeing a potential rejection to the upside, because always remember that M patterns are quite important manipulation patterns that the market likes to create, because remember that in the market, for every buyer there needs to be a seller, and for every seller there needs to be a buyer. So if institutions in the market don't have enough liquidity at any specific moment, these manipulations can help create that liquidity, because when the market is creating a push to the upside, then a correction, and then it starts going higher, what we know is that most retail traders will start longing. Now, if you have to trigger their stop losses, it's a good thing to assume that their stop loss will most likely be below the low, right? Below the previous low. So if the market then goes and it essentially reaches those areas, all those stop losses get triggered. And that essentially is the creation of the M pattern. And at that point, the market, in my experience, tends to create a rejection to the upside. We can see, for example, here, we had the creation of this M pattern. After that, the market created a massive rejection to the upside. And I also spoke about EURUSD when the market was around this area, explaining all the reasons for which I was expecting this rejection to the upside. And by the way, you find that previous analysis linked in the description, so you can go and check it out for more free education. But at the moment, what kind of situation we currently have? Well, before we dig deeper into what we have here on the technical side, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. And let's look at the data precisely for the euro. Now, if we look at the data here for the euro, we can see how with the last reports, net positions have been massively increased. We went from minus 64.4k net positions, so a negative net positioning in which institutions had more shorts than longs, 230k shorts compared to only 165k longs, all the way up to now having a positive net positioning of 13k net positions with an extra 3,400 longs added just with the last report and 19,700 shorts getting closed, reaching 188,000 longs compared to only 175k shorts. So we had a clear inversion from institutions having more shorts than longs to now having the complete opposite, so more longs than shorts. And institutions are still adding longs and closing shorts. So 8,000 shorts closed here, 4,000 longs added. 13,000 shorts closed, 12,000 longs added. 12,000 shorts closed, 2,500 longs opened. And now another 19,000 shorts closed and 3.4k longs getting added. So it's clear that institutions are aggressively moving to the bullish side for EURUSD. And in fact, it is no surprise that the market has created a massive rejection to the upside, fueled by all that institutional longing. So if the market will create this M pattern, what would I expect? Well, first of all, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, if the market would create this rejection to the downside and print this M pattern, and the market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see more institutional longing and a potential rejection to the upside, completing this M pattern. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.